Welcome to the October 21st, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman with your fast-paced tour of the global financial markets. Today we're going to focus on 2020 and what we just learned this week from the first round of earnings reports. 74 companies out of the S&P 500 reporting earnings this week. It was a yawn, but it has implications in different sectors that I wanted to get to. Dow Jones Industrial Average bouncing its head off this 27,000 level again at the end of the week. So earnings reports were not dire and unexpectedly bad. And the Dow climbs back up to about 27,000, which it's been doing, well, since the beginning of 2018. That's the Christmas crisis of 2018, the mini panic, the first bear cycle in 10 years. And there's the recovery to a level that has people more or less yawning as the Dow bounces its head off 27,000. There is a meeting in November in Chile where both Trump and Xi will be there. If they sing Kumbaya, we could break at least temporarily above this level. We'll see exactly what happens in their November meeting and how their schoolyard brawl is going in the meantime. S&P 500 earnings chart, because the net present value of a company based on cash flow and earnings is how much money do they make, how much will it grow or shrink, and what do I earn as an investor longer term on that asset. You can see earnings shrank from these levels, right? And that corresponded to the peak in the Dow back in August of 2018. It hit about right here. Then we had a bear cycle. This was part of what was being anticipated. It's easier in hindsight always. But look at this. We've got about a 10% increase in earnings coming up for the fourth quarter and the first quarter. And then on up from there. It would be a total increase of over 20% in earnings by 2021. Can these companies pull it off? Well, grain of salt, the analysts are usually too optimistic, but here's what happened this week. So, IBM just wrecked the whole party. They had their big acquisition and their cloud-based revenue was down. That was supposed to be golden. It wasn't. And look at this, 34% down earnings for the tech sector, information technology. Remember, technology led last year through 2018 summer. All the tech earnings reports were so good that you had a catapult upward in the indexes. There's no leadership in this index. We do see leadership right here. Communication services, boring, stodgy old phone companies. Well, they got a nice increase, 39%, but that's only 2 out of 23. We'll keep you updated on that. Energy, about a -3. There's a yawn right there. Sales growth was 3%. Energy was a -1. Overall, earnings growth a -3. That's IBM. Energy was like a -1, but we only have 2 out of 28 companies there. We'll be back next week with these updates as well, because it's a huge earnings week ahead, just like this one was. But we'll have enough of this data to actually triangulate, are these companies capable of that kind of earnings increase? Real estate's leading the charge in earnings, in part because their borrowing costs went way down. They're highly leveraged to interest rates. It's like a hyper-duration bond. What's economic growth look like for 2020? That's the key question. We've heard slowing growth. We've heard the recession word, the looming recession we covered last week. All scary. Well, 2.3% is the forecast for this year. We're almost at the end of the year, so the Bloomberg forecast tends to be pretty accurate, at least for the next 20 minutes. And then 1.7% for 2020. That's a big chunk. That's 25% slowdown in growth, but it's still growth. And then 1.8% for 2021. Could that be a Goldilocks situation for corporate profits? There's your key variable, but We're not seeing substantial inflation here. We got 1.8 for this year, 2 for next year, and it may not come in at that depending on gasoline prices and things like that. Okay, what's the Fed going to do? October 30th, their next meeting, 84% likely they're going to cut the short rates again for the third time this year, after telling us all last year they were going to raise them all year this year. Well, they updated their models apparently. But then, when we look at this, the probabilities have moved up that they'll go even lower because the rest of the world has lower cash rates. The Toyota Motor Company borrowed money at 0% this past week, essentially. Now, what does that mean for the investors? Well, the average investor over the last 20 years has only done 1.9% according to Dalbar, because they actually take who owns what mutual fund and where'd the money go and who sold out at the bottom and who got in at the top and those kinds of equations. They say it's 1.9%. What was the return on the S&P? 5.6. How much did your house go up in value over 20 years? 3.4%. What looks pretty attractive? Well, anything above 7% is golden. You got oil, you got gold, you got real estate investment trusts leading the charge there. Well, what does that mean for you and I, the investor? If we can lock in a cash-on-cash yield that's 7% or more, and it doesn't go down very much, we're doing pretty good. And if we get a gain, even better. So that strategy at NetWorthRadio.com, with value at risk of loss discussion and capital gain opportunities. The extended discussion is NetWorthRadio.com. Be sure to subscribe. We are adding subscribers. Grateful for that, because you'll get updates in fast-breaking financial markets 5 to 10 minutes a week, and boom, you're ready to go to make great investment decisions. Better yet, come down to the Crescent, get a free 1-hour brainstorming session and an updated plan for 2020. I'm Spencer McGowan. Thank you for joining us at YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you, as an investor, make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.